Good morning all and welcome to today's video. So this morning I have three pairs on watch and those are EURCAD, Eurodollar and Pound Aussie. So I'm going to break them down for you now, give you my thought process as always, and then tell you what I will be looking for with a little more specifics. I'll try that again, specifics on the lower time frames with regards to my entry. So EURCAD on the higher time frames, we have this sharp move down and the sharp move up. I've said in previous videos that when we have a sharp move down and a sharp move up, that often implies that there is a lot of liquidity here, especially when we rally like we did to the upside. So what happens? We tap into that area. We break below. Remember, I've said before that we often have to break below the higher time frame liquidity points before we rally to the upside. And that is because the brokers like to put out news releases such as pound or EURCAD at 8-year low, which makes people think that are just a lot of the time just trying to get rich quick. They think that price is going to keep going. It's broken below. This is now resistance. So they start selling and then the big players step in because they see this as a bargain area of value for a buy. Okay, there are scenarios which I'm not going to go into in detail. There are scenarios where we break below something like this on the higher time frames, and we do end up with a higher an area of value for a sell, but not typically when we just break below it. Okay, for investors and the big players, that represents a bargain. If you're looking at a home or something, you want to buy a home and it's always been just above your price range, if it dips just below it, then unless there's some kind of fundamental change, which we can see by way of the higher time frame structure more often than not, then that just represents a bargain area of value for a buy. So always try and think of trading like a business rather than as a casino. And then, that's what I was doing when I first started learning to trade. Certain things didn't make sense to me. It didn't make sense to me why a lot of these support and resistance strategies, which I was testing and demo trading at the time, why you had to suddenly just take profit at a random low or a random high. I thought, well, it doesn't make sense. My partner used to run, my partner's gran was a bit of an entrepreneur and she used to have her own clothes shop. And I often used to think of it in terms of, if my partner's gran was running her clothing business, why would she suddenly just get rid of a clothing range or a line of clothing that was making her money? It doesn't make sense unless there was some kind of stall in price, which is something altogether different. If there was some kind of stall in price, or whether that line of clothing just stopped making money, then you may stop selling that line of clothing, but not when something's making you money. So I didn't understand why some of these support and resistance traders just suddenly took profit at certain areas, and then price would just continue. That never made sense to me. So I've digressed a little bit, but anyway, you get the point. So bargain area of value for a buy, we push up aggressively. I've said previously that we typically see these larger flags halfway within a range. Okay, so the range being here to here. Okay, and if we just measure the impulse up and end it at the start of the correction, which is what we do, and then we start it at the base or where price is now, if it was to push up of the overall correction, that would take us up to this area, which makes sense because we have a near miss. So when we get close to an area of value and we don't quite tag it, it's more likely that we will take out this near miss and the high that is sat just above it. And obviously the flip side applies if we're looking to get short. I then drill down and we have the same thing here. I've touched on this previous. We have a near miss to here. When I see that, price is more likely to push up and then come crashing back down to break the lows because we're on the higher time frame once again. Break the lows before pushing up to the upside, okay? Especially when, this happens to be this happens to be the base of a piece of structure as well, okay? So I've touched on that previously. That's something I mentioned in my advanced self-review, which is something that I do at the weekend to analyze areas where I could actually improve. And how did we get to this area? We got to this area by way of a reversal structure, a 1, 2, 3 touch structure with an internal 1, 2, 3, a 1, 2, 3 within it. And then if I just drill down, We also had a corrective. How did we break this trend line? Okay, we correctively broke it. We didn't impulsively break through it. We correctively broke through it, giving me a clue that the next move is likely an impulse up. We then get the impulse, correction, continuation, and then we break this structure impulsively and we form a correction afterwards. Okay, so this is pretty much as textbook as it gets when it comes to the Falcon strategy, which is what I'm trading. And if you're wondering, if you're watching this on YouTube or elsewhere, if you're wondering why I'm slightly later today, that's because I attended a Monday live market breakdown last night. That's something that we do at the end of the month within the Falcon community. And we just have a big meet up and talk about goals and what we're looking at and so forth. And it's a very sort of motivational, uplifting experience. So if you're not a Falcon member, you can click on the link on my YouTube channel if you wish. I'm not bothered whether you do or not, but if you wish to be a part of the fun, then you can be a part of that. You can have a look at what is actually involved on the referral link that I've got on my YouTube channel, but that's completely up to you. So what I'll be looking for today, I said yesterday, or this is what I was thinking yesterday, I can't remember whether I said it, but we had this sharp area here. I wasn't worried about this because this looks like a separate piece of price action. Okay, so we broke above that, retested it, and then pushed up. So I'm not so worried about this at the moment as being part of this structure. Then we went into a bit of a running channel, and this happens to be the base of that running channel. Okay, so that gives me a clue that this is potentially where the liquidity is. So when I saw this 1, 2, 3 and price push up to here, I wasn't convinced that this was going to be the move to go, because we have an inflection point here, a hook point, which happens to be the start of a little running channel. Okay, so I thought that we would likely push up correctively, which is what we've done. Obviously, you can see prices messing about a bit at the moment. We moved up correctively, okay, and these sharp moves down give me an indication that that is price being dragged back down by orders which are still here and being placed in this area. So what I'll be looking for today with that in mind, I'll be looking for a 1, 2, 3 down to this area. But because we do have that set just below, not a million miles below, how many pips is that? It's not a million miles, it's about 17 pips. And we also have this trend line here. It just happens to coincide with the trend line. What I'll be looking for is price to break below. Of course, if we break below, it would be potentially more risky to take a risk entry from this trend line with that set just below. So I'll be waiting for a push up followed by a flag, and then I'll be able to manage this for something in the region of 2% up to the trend line. Of course, if we pushed up a little bit higher and pushed down, then I would evolve the trend line. I would evolve the trend line, and then I would have even more room to manage the trade. So that's what I'm going to be looking for, and I have an alert set down here. If it's not triggered, then given how correctively we've moved up, I'm not interested in placing a trade unless my forecast entry requirements are met. So that is nice and simple. That is EURCAD. So speeding up ever slightly. So second on my list is euro dollar. So euro dollar on the higher time frames, if I just zoom right out, on the higher time frames, we have tapped into the last exchange of liquidity that is visible on my chart. So when I scroll left, the last area where there was an exchange of liquidity which caused a rally to the upside is here. What happens? We push down aggressively. All the people that caught this move to the downside get out of their positions, or many of them would have done. We break below, catch people the wrong side of the market, bargain area of value for a buy once again. We stop everybody out. The limit orders get filled, and then we move aggressively to the upside with a similar level of aggression as we moved up last time around. We then have a correction. We have an impulse correction, potential continuation, and if we just measure this ever so slightly, I think it's in the region of 50%, just shy of it. So that would be a healthy correction for a move to the upside. I have just move my trend lines to the two most recent touches, which is what we do within Falcon. But we kind of have this, if we have a look at this. Now, previously, if you've been watching my videos regularly, you will know that I was looking at this for an area, looking at this as a potential buy area. especially because it happens to be the base of a piece of structure where we rallied from aggressively last time around. Okay, so that was my bias. I was looking to get long from here. I didn't manage to get an entry. However, one of the reasons, if you watch my previous videos, why I had this pair slightly lower down on my list of pairs is because I said that we had an area of liquidity sat just below it. Okay, which means that it's more likely. So if this wasn't sat here and we reacted from this area as we did, we pushed up there aggressively, this is more likely to play out to the upside versus when we have a sharp area of liquidity sat just below it. So that's why this pair was lower down on my watch list in my previous videos. As I said, I don't know what's going to happen next in trading. Nobody does, regardless of what they tell you in your comments section on whatever platform you're trading on or posting on. So with that in mind, sometimes, as I said, we kind of reacted. If we'd had our ray line, if I'd had my ray line here last time around, we did kind of react from that area and push up. We did break below this. We tapped into this area, but we didn't break below it. And as I've said, often it's the case that where, the liquidity for a rally or a sell-off is located, we often need to break below that if we're going to rally to the upside. And obviously the same applies on the flip side. So with that in mind, just to touch on it very quickly, there's nothing really set. There is another one here, but I don't think this is of as much significance. If we just zoom out to the weekly, we can see this one on the weekly chart, but we can't see the one below it on the weekly chart. So this one holds more significance when it's visible on more time frames than another one. Then it holds more significance. So with that in mind, what I'll be looking for today is we kind of, just to touch on it, look, we even have a near miss. We get close to that area, we miss it by about, what was that, 4 pips or something. We push up, potentially get people caught into the buy positions too early. Then we push down, break below here. And with all that in mind, and the other point, how did we break this area? We broke it quite correctively. We have one bearish candle there, but overall, this is a corrective break of this area of value. What do we know? If we break an area correctively, then the next move up is likely an impulse in the other direction. So very simple stuff. And with that in mind, what I'll be looking for today, I have an alert set just above the ray line, which may trigger by the end of this video. But if we push up impulsively and we flag, then I will be looking to get long either on the break of the flag or within it. And then I will be able to manage this up to this high. I'm not really bothered about this inflection point here so much because it's quite close to this one. So if we tag that, then we will have retraced like about 85% of this move. So if we find our way to here, then we'll likely find our way to here as well. But regardless, there's plenty of room to manage this. And if we did push up and flag, we would likely move up with the same level of aggression as we came down, which would make this even easier to manage. So that is euro dollar. I'm going to put the path tool away, and I'm going to and just to touch on it, if you look at where the DXY is positioned, we may push a little bit lower on euro dollar before pushing up, because on the DXY we are sat at this area of value here. Okay, we did the same thing on the flip side. This is the inverse of euro dollar. On this one, we haven't broken the highs, as I was just talking about at the moment. So this looks like it may be trapping sellers in too early, but we shall see. So I wouldn't be surprised if this scoops back up, breaks the high, and then drops back in. And then, of course, if that was to happen, then on the flip side, euro dollar may push a little bit lower before pushing up, but that's fine. The lower we push and push back in, the more people we've potentially washed out of their positions, and typically speaking, the more aggressive the rally to the upside may be. But we shall see. So pound Aussie last on the list. So pound Aussie, if I just zoom out to the weekly, so we have this price taps into this area. You can see it taps into where this wick is. If I just drill down a little bit on the daily chart, you can see that we have a sharp move up, sharp move down. If I just zoom in a little bit, make it a bit clearer. Sharp move up, sharp move down, which was the causation of this. The orders here were the causation of this aggressive sell-off. So it's no surprise to me that when we tap into this area again, we get people caught the wrong side of the market for the reasons previously expressed, and then we push down by way of impulse correction continuations, which is the natural ebb and flow of the market. We have a near miss down here which will likely get filled, particularly when it happens to have near missed a very clear 3-touch structure. I've just cut through that wick because it doesn't make sense in terms of the structure. So that makes sense as well. If I just zoom down, you can see that we near missed this area, tapped into it, and then impulse correction continuation. So we have what we call an expanding pattern. So where we have lower lows and equal or higher highs, that is an expanding pattern. There's not a great deal to see here. We're getting momentum to the upside, but we often see that on the last leg. Okay, so if I just zoom down, there's not a great deal more to see. The sequence isn't quite as good on this because we start with this disproportionate flag relative to the move down. Then we go into another very large flag, which is very large relative to what we would typically see in this kind of area. We tend to see these where we are now, not so much all the way up here. So the sequence isn't quite as good as on this pair, which is partly why it's last on the list. But then after that, we follow a nice sequence of impulse correction continuations that are proportionate to the impulses which have preceded them. And if you just look here, we potentially got people locked into their positions too early. So we have this little tiny inflection point, which was the causation of this aggressive sell-off, which gives me a clue that there's potentially a lot of liquidity here. We then wick to that area. But we wick there by way of a bullish wick. So when we see these bullish candles with a bullish wick above a green wick, they often get filled. We do fill it, but we fill it by way of another wick, another bullish wick, which kind of narrowly misses that. So this is giving me a clue that there's potentially liquidity above here, which needs to be filled, which is why when we broke the lows, price pushed back in aggressively. And the other clue that this may be about to complete this structure is we have a very deliberate 1, 2, 3 touch wave move within this structure, which gives me a clue. If we just measure this, how long we got left? 3 minutes, just under 3 minutes. If we just measure this, that would kind of make sense as well. So we may push a little bit higher, but we have an impulse correction continuation. These are typically completed moves when they're very deliberate. So when a completed move lines up with a 1, 2, 3, particularly when the first touch was the causation of a aggressive sell-off last time around, that gives me a clue that we could be looking for shorts in this area. There is a little area of liquidity sat just above this, and I am mindful of the fact that relative to this move down, we've impulsed up quite a lot of the way. So because of that, we've retraced like 70% of that move. So because of that, I will not be looking for a risk entry in this area. This correction is very wide as well relative to the impulse down which has preceded it, which does increase the probability of price pushing to the upside and creating what we call an M style pattern. So we could get something like this and then the sell-off, and then this becomes that kind of M style pattern. Whoops, let's try that again. We get this kind of M style pattern like that. Okay, so when too much volume builds up, price will often then break to the upside, tap into another area, and then sell off. So because of that, and because that's a possibility, that means as well that I'm not going to be taking a risk entry from the top here, and that I will instead be looking for price to tap into this area. I think if we do go push to the downside, we'll likely break above here now, slightly above it, because we've already tapped into this multiple times and price did not find enough liquidity to send it to the downside. So that gives me a clue that we'll likely break above if we're going to rally sell off to the downside. But regardless, I'll be looking for a tap into this. We've kind of tapped into this area now. Whether we sell off from here is another matter, but I'll be looking for a very deliberate push down on the flag, and then I'll be looking to get short either on the break of the flag or within it. And that is my forecast today, folks. I have about 30 seconds left of this video. I hope you've enjoyed this video and taken some value from it, and I will be back providing I have a pair or pairs on watch, or if I've placed a trade. I'm sure that will happen at some point. Once again, I will bring you a trade recap of whatever trade that happens to be. Thanks very much for watching, folks, and I'll speak to you again soon.